Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. Now, we saw equity markets open lower last night. Gaps open lower. That weakness from last week carried over, but again, another Sunday night low. And we saw the price action recover. S&P, NASDAQ, Dow, all of them green ahead of the bell, and then they turned red again. So we're ping-ponging around, but overall here in the afternoon, as we look into the second half of the day, they are all positive once again. Pending home sales today, 44% increase. And these numbers, when you look at this stuff, I mean, we're seeing sharp jumps compared to previous months when there was zero demand out there and lockdowns. So the headlines, they are lifting sentiment when you see them, but they really are still pretty poor in a lot of it. Not necessarily the pending home sales, but I'm talking about the manufacturing PMIs and some of the numbers we're looking for this week here. Just tonight, you got Chinese manufacturing PMI coming out, and that is expected to come on a little bit of an expansion. But remember, these are expansions on just dismal numbers. So on Wednesday, ISM manufacturing in the U.S. is going to be a crucial number to watch. You got consumer confidence, which is a great read tomorrow to look to. So there's a lot of data this week to keep an eye on. But again, pending home sales today, 44% increase, and then you got tonight Chinese manufacturing closely watched. So those numbers coming out, and we lead into tomorrow numbers as well. UK GDP, EC out of Eurozone CPI, and then consumer confidence in the U.S. So a lot of data to look at. But first, that Chinese manufacturing tonight. You have John Williams, the New York Fed president, talking today at 2 p.m. Central Time. So keep an eye on what he has to say. But talk about these markets. You're seeing again the S&P move up. Sunday night bottoms. These Sunday night bottoms the last several weeks have brought a tailwind through the middle part of the week. Can it do that again? We do have some strong resistance to get to, and I want to show you here on the chart and let's take a look at the heat map and how mixed the session is. But first, I want to say non-farm payroll is Thursday this week, not Friday. The holiday session Friday. Thursday's number. What you want to do is you'll see a link below this video on our site or on YouTube, wherever you're watching it. You will be able to sign up for a guess the number, guess the payroll on that Thursday number. Sign up. Sometime we'll put a deadline out there, but we're looking obviously before that number comes out. You enter your information, the number of jobs that you think we'll see either increase or decrease on that headline payroll number, and you get to choose a Blue Line Polo, Blue Line Futures Polo, or one of our great hats. All of our clients will be getting something in the mail over the coming weeks anyways, but hey, can't hurt to sign up, get another one, have two shirts or two hats, and that way you always have something fresh, a Blue Line to wear. So check that out. Guess the payroll number. You'll see a link either below this video on our website, or you'll also see it in the email if you're getting it too. So guess that number for payroll Thursday, and then taking a look at the heat map today. Very mixed session. You got Facebook coming back strongly, up 1.5%, 1.7%. It was down 2.5% before the bell, 3% before the bell. Twitter was down as well. They're both positive here. A lot of green on the board as the market's broadly higher. The healthcare lagging, Amazon lagging. So you're seeing industrials move. You're seeing some of the banks move. Some of the stuff that hasn't performed well is moving fairly good. And then obviously the ones that perform very poorly, like Facebook and Twitter, back into green here today too. So heat map mixed, but showing how the session is. It is positive. Now here, take a look at this S&P chart. It's one that we've shown you many times. You got this trend line here from the low, and this is going to battle and give you some resistance. Support levels that we moved into, just broadly speaking, a general area of support, 2980, 2960. We moved into that today, and that held. So for now, we're looking at this thing trying to double bottom. But you look at more intraday, you got these resistance levels here. This is that trend line from the low. It's going to bring some resistance. The lines here, the trend line now from the high. A lot of resistance in this area here. 3050 up to about 3065, and that 3065 is now not only the halfway retracement, but it was the intraday opening bell, 8:30 open Central Time, about 3065. So a lot of resistance as the market moves into there, and then our favorite 382 number, which we haven't been able to get out above at least yet today, and it's going to bring some resistance. And then, not to mention, you got good sell volume as this market fell off on Friday right there. Now, taking a look at the NASDAQ, you got the support previous high, and we think this is just we continue to talk about it. I bring it up all the time. It's holding out above its previous record highs. That is a characteristic of a bull market. So NASDAQ is holding very well. And if that starts to give up that ground, that's going to be a signal for the rest of the market. So keep an eye on the NASDAQ. 97.5, a big level of support, major 3-star support we have in there. Pinged it overnight last night. Crude oil, same thing. Risk on assets have this trend line from those April lows, March lows some, but whenever they made that low, you see this in here, and it's battling very well. Just want to bring that up because also remember, if it does turn higher, another higher low here compared to late last week compared to Thursday, a lot of support at 36.90 area in crude oil, turn higher. 42.33 still has not covered that gap. So you know what? It's a strong session here. Consolidating very well. Chinese manufacturing data tonight is going to be crucial for crude oil. So keep an eye on that. And what it does, if it comes in better, and you could really see crude on the path to cover that gap, 42.33. And then we see OPEC compliance come into the mix. It's going to be talked about a lot this week and next week. Now gold, I think here is something really we want to point out. The continuous contract and the regular August contract are a little different. So the continuous contract for gold, you got this breakout, clear breakout of the trend line, retest the trend line and hold here on Friday. You can see this just really, really well. You see the tail, good momentum today. Mondays have not been friendly to gold. We've seen gold lose ground Sunday night. I think the last couple of weeks we've seen that happen, and at least gold holding ground okay here today. But if you take a look at this August only contract, really it did not break out yet. So you still have this previous resistance that's holding out above it. So listen, we like gold. We like gold a lot. I do think over the long term, intermediate to long term, you see gold higher. But that timeline where gold needs to perform is slowly closing because you need to see gold really break out sometime before September. And it happens in August, and then you go through a dull time of year for gold. So that timeline is shrinking. This is go time here, and then if the data starts to improve, really, again, we think that you have this data bounce back after March and April, and then now you start to see it lag a little bit because it starts to exude how poor it really is. But then what you got to watch out for is as we head into the end of quarter 3 and into quarter 4, then that's where the data actually could become much better. The demand's out there. Obviously, we're still, there's still concern here, that steepening virus curve, but outside of that right now, that's still developing. The deaths are not there. So compared to the big steepening of that virus outbreak overall in the southern states, the death rate is not increasing. So it's really showing us a lot in the testing. But if the data starts to improve, it's not going to be good for gold after August, after September. So it's go time now. And then we have our seasonal buy second half of December for gold. So keep that in mind. We're here to help talk about that in more detail. And lastly, finishing with the currencies, big tail here today in the euro. Let's take a look at this. Big tail here today in the euro. Right there, if you see that. And then you get the 50-day moving average moving out above the 200-day. So it hasn't happened yet. And if the euro does fall flat on its face this week, you can see you really could see a failed crossover there, which actually helps really encourage more selling on such a failed crossover. So keep that in mind as if the euro follows through the downside here. We tend to favor the U.S. dollar strength. Remember, I'm talking about quite a bit, and as we look into the end of quarter 3, into quarter 4, that's where we think the dollar is really going to be able to rally. So keep that in mind. And then you have the Aussie dollar here, very similar with the 50-day moving average, trying to cross out above that 200, and then overall too, the trend line breakout. But it is sort of stalling. And again, if the Aussie breaks lower, Chinese manufacturing, big number for that tonight, 8 p.m. Central Time, breaks lower, the failed cross would really help excel to the downside. One we talked about positioning on Friday. The Canadian dollar is moving lower. It's moving into some support. And if this starts to snowball and fall over and roll over pretty sharply, our spread we talked about on Friday, a 1x3, short the 73 September put, and long 3 of the 72 September puts. I'm here to talk about that. Give us a shout. Love to talk about it. Anything on the board that you want to talk about, give us a call, 312-278-0500. Remember, the futures trading involves substantial risk of loss. It's not suitable for all investors. Sign up for the guess the number for the non-farm payroll to win a free shirt, win a free hat. We'd love to send them out. So sign up. Don't forget. Thank you.